Michael, thanks so much for joining us today. We've got the rand yesterday having weakened for a second consecutive session. We've got that weakness still continuing to filter through this morning, and the 8 level at this point seems to be a pretty magnetic one.
Good morning, Alishia. Yes, indeed. I think we still are inclined to buy into dollar dips. I think the risk for the rand is to the top side. We're still comfortably within that 820 down to kind of 770 range, and we'd be looking at kind of 806 as an initial target to the top side. I think the rand continues to play fiddle according to what's happening in Europe. And of course now the attention is shifting to Italy as well. It's not just a Greek problem.
How are you reading the kind of developments we're seeing unfold there, Michael?
Well, unfortunately, it's not good for risky assets because I think what we see now is Greece is still struggling to kind of get its ducks in a row in terms of forming a coalition government and ultimately obtaining that second tranche of that financial bailout package, which it so desperately needs. They need to raise basically package in order to get through their debt obligations over the coming month. And then if we turn our attention to Italy, there the debt problem is so much greater and there doesn't seem to be much confidence in the authorities there. So unfortunately, it's not looking good now in Italy as well. And as I say, if we combine Greece, Portugal, Spain and Irish debt together, we only then get up to figures that we see when we look at Italian debt. So the Italian problem is a big one if that one unfolds nastily.
Of course, it's the nervousness around all of that uncertainty, Michael, that's keeping trading volumes pretty thin. Yesterday, we saw volumes hitting its lowest in over 2 months as investors stayed away from the markets. Is that likely to be the trend from here on out until that clear and effective communication and resolution is put on the table?
I think so. I think volumes probably will be quite light. People don't have strong conviction, and if anything, they're going to err on the side of caution and plow into those safe haven assets. We've seen gold doing very well. We've seen the Japanese yen doing very well up until we saw that intervention a couple of weeks ago. And then, of course, the US dollar. As we know, the US economy's got its problems, but people are sort of scurrying for the dollar for a safe haven place. So there's a lot of uncertainty, and those people that don't need to commit are probably going to seek the safety of the sidelines. But as I said a bit earlier, I think that doesn't bode well for risky assets. People are reluctant to put on risk at this stage. We're getting close to year end, and that might also be a factor. But I think it's all about the uncertainty as how this European debt crisis is going to play out.
Let's take a look at currencies across the board here. I mean, we're constantly talking about the rand dollar. Let's take a look at the crosses at this stage of the game. We've been talking about the dollar and the euro as being the ugly sisters, and it's just a matter of the day on deciding which is the uglier of the two. For you right now, Michael, is the dollar standing in better standing?
I think so, and I think it's really because I don't think that the US economy is going to default on its debt. We had that rating downgrade a few months back, but we still have got a lot of faith in the authorities to make good on their payments. And I don't think you can say the same about Europe at this stage. I think we are going to get a default out of Greece. The question is, how is that default going to really unravel? Is it going to be an orderly default? But some other haircut is going to need to be taken on that front. And now, as I say, we've got Italy coming under the spotlight, and that debt problem is so much greater. So, if they suddenly don't pass those austerity measures and the ECB stops buying their debt, then all of a sudden there's a possibility that they would also need some kind of a bailout, which probably would be a bridge too far for these EU authorities to finance, or we could have some kind of a default there as well. So I think between the two, I would favour the dollar in the short term. I think over the long term, still worried about the dollar simply because of all the liquidity that we've seen coming into these markets over recent years.